talk to me about costs. This is what investors are worried about. Where will you spend the money in the future?
Well, I think the key thing actually today was top line growing 6% and the bottom line growing 34%, as you say. And I think cost is a sort of second order issue. We are significantly improving the profitability of the business. Our return on equity is up nearly to 7%, which is much more where we want it to be. The costs were up about 7% year on year, a little bit less on a constant foreign exchange basis. But that in large part was very deliberate, that we brought forward some of the investment we're making to improve the systems in the business. And we have guided that overall for the full year, we would expect to be at a similar level to the one we're at in the first half in the second half.
Yeah, and Andy, you're absolutely right. The ROE is absolutely crucial. But on costs, a lot of it, for example, was technology spending. So you could argue this was a necessary part in the restructuring. Will you continue to spend as much in technology? Can you guide us onto how you see costs from now until the end of the year?
Yeah, so the overall costs we would see being similar in the second half to what we've just spent in the first half. And that was what we actually said this morning. The technology part of it is really important to your question. We absolutely have increased the spend on improving the IT infrastructure. And over the last 3 years or so, we have pretty much doubled the spend. And that obviously is something which is coming through and weighing down a little bit on our costs. But what it is giving us the capability to do with our clients is much, much improved. Onboarding some of our clients used to take 40 days or so, and now that's down to about 8 days. So it's really, really making a difference, and we're going to continue to invest at that level so that we really can grow the business for the long term.
How will you reassure investors that this investment will be okay and that you will be able to keep those costs under control? Because that does seem to be weighing the share price down today, despite the beat on the bottom line.
Yeah, I mean, we have said that we are very mindful of the costs, and I think so long as we can see that the top line growth that is coming off the investments is genuinely improving the returns, and that is evidentially the case at the moment, then we will be very, very focused upon investing. Costs we will control, but investing is most important. And the biggest issue for the bank is actually getting its returns up above its cost of capital. We were negative territory 3 years ago. We have progressively moved our way up. We're now nearly 7%. So we're definitely on the right track.
Yeah. You've got an 8% target for return on equity in the medium term. How much will you need to boost full year revenue to achieve this?
Well, the 8%, as you say, is in the medium term, so it's not a current year number. And the first half of the year actually gets slightly flattered because we don't have bank levy charges. So we've said over the next 2 or 3 years, we will get to that 8% level. And we're not going to stop at 8% either. The intent is clearly we will get above that at a point in time, but it is a landing point for going beyond it later.
Andy Halford, I'm also looking, of course, at some of the progress you're making in tamping down some of the bad loan risks. Do you think shareholders are giving you too much of a rough time? Do they just need to give you a break?
Well, it would be nice to think that over a period of time we'll see the share price picking up a little bit more, but at the end of the day, investors will form their own views. Certainly the quality of the balance sheet and the costs that we're taking through on bad loans is much, much improved. So 300 million in a half year. It was only 3 years ago that we took 2.5 billion of charges in a single year. So it is really in a much, much better space. So I think individual components are definitely on an improving trend. Those are the things we can control, and those are the things we're very focused upon.
What will you do with your excess capital? Will it be, given back to shareholders?
Well, it's nice to have people talk about capital and the word excess in one sentence, because only 3 years ago we were having to do a rights issue. So, yeah, our capital number now is much stronger, just over 14%, which is a much, much better position to be in. We reintroduced the dividend at the end of last year. We've announced the first interim dividend since then, 6 cents a share. So as we look forwards and as the profits increase, then we will obviously be very focused on what we can do to return that value to shareholders.
You've already said this morning, or Standard Chartered has said, that the trade war impact is limited. But are you making any preparations nonetheless in case of any adverse impact?
Yeah, so we have got a big business in China. And I think sometimes if you look at our share price, people would think it was almost the only business we have. And that is not the case. So depending upon how you look at it, 2 or 3% of our total business is trade between the US and China or Hong Kong. So it is a small part of our business. It's important, but it is only a small part of the business. At the moment, we are not seeing evidential signs of weakness, but obviously we are keeping a very, very close eye on it. And over a period of time, we'll see what happens there. But a lot of activity that is happening in China at the moment will continue anyway, and we are actually very well positioned if that trade does divert itself more into Asia or into other parts of the world. So we're reasonably neutral, but obviously keeping a very watchful eye.
I mean, what worries you the most domestically about China? So away from the trade wars, is there a concern that some of the policy, some of the extra stimulus that the Chinese policymakers have put in place will actually fuel bad debt, that we're kind of back to square one? They're trying to put a hole in a peg.
I'm not sure. I think generally the Chinese authorities are wanting their economy to be more integrated into the world economy. And we as an international bank, one of the two major international banks, provide a degree of connectivity there that is pretty special. We actually in the first half saw our income in China go up 24%. So, even though there has obviously been concern about tariff wars, etc., the underlying activity we're seeing in country is really strong. It continues to be an area that we're very focused upon. We think we have something very unique, and we're going to continue to play to that as strongly as we can do.
I mean, can you hedge anything to counter a trade war if you're Standard Chartered, or is it just impossible?
I think it depends on exactly how a trade war manifests itself. If it is specific to certain sectors, it is probably not so much an issue of hedging, but one of actually looking at where the supply chain flows actually move to compared with where they are today. But as I say, it's really early days, and at this point in time, not seeing any noticeable change, but obviously something we are very alert to.
Andrew, can you give us an update on the latest on splitting your Asian hubs into two new standalone units, Singapore and Hong Kong?
Yeah, so a few months ago, we took a close look at the business. We have a lot of our activity in Northern Asia. We have a lot of our activity in Southern Asia, and yet our legal structure is somewhat different to that. So we took the decision that we would make moves to actually align our legal structure with how we actually manage the business. That is in progress. We have made the first steps in Singapore, where we used to run two businesses. We now run it as one. So that is very much working its way through the system as we talk.
And Andy, the benefits of that split is what exactly? Is it tangible? Do shareholders ask you a lot about it?
It is two things, really. One, it gets our managerial structure more aligned with our legal entity structure, which just makes the business an easier business to run. And secondly, it aligns some of where we generate big amounts of liquidity with some of the businesses that are funded by that liquidity into more natural groupings, which take away some of the friction costs that we currently have in the business.
And what's your outlook for impairments?
Well, an interesting question. Impairments are notoriously difficult to predict because they are very idiosyncratic and depend very much on individual client situations. The first half has been very, very low, so a 0.3 billion charge, which by our standards, you have to go back many years before since we had a number as low as that. So what we've said is the second half, it would be nice to think it'd be as low as that. I suspect it won't be. Most of the analysts think the full year number will be about $1 billion. If we could crack that, that would be fantastic. It was only 2 or 3 years ago, we were 2.5, so $1 billion or less would be a great outcome, and testimony to a lot of work we've done to clean up the balance sheet and get it into good order.
Can you give any reassurance to shareholders that you're going to sort out the US sanctions issue?
Well, the US sanctions issue is a very complex one. We run in many, many markets around the world. Getting all the systems, all the processes in place is a serious endeavour. It has taken us quite a period of time. We have made evidential improvement. The regulators recognise that, but there is still some more to do. So yes, at a point in time, we will absolutely have got everything compliant with what is required by regulators, and at that point I think we'll have something very unique, because we'll then operate in 60 or so countries around the world to a globally consistent standard. So we're not quite there, we're very nearly there, and we need to give it a final shove to get it across the line.
Are you anticipating any additional fines?
Well, we have said that we have got ongoing discussions with the US and UK authorities on a number of issues. We've said that as and when we know more about the outcome of those, then obviously we'll talk about them at that point in time.